Hi traders, I'm quite convinced that MRF will have to intervene in the currency once again, and that could see a lower dollar yen, Aussie yen, euro yen, etc. Now, something of interest for the dollar yen specifically is it's just risen for a 7th consecutive day. We've not seen that decent streak since June 2024. So that alone suggests we could be looking for a period of mean reversion. You've also got the daily RSI, which has been overbought for several days now. The fact that we've got resistance levels and the growing likelihood of intervention, I think paves the way for a decent move lower. Now, I covered this in more detail in previous videos, but looking back through history of prior interventions, we get some pretty decent sell-off. It tends to coincide with multi-week or preferably multi-month tops on dollar yen. If we were to see the smallest of those sell-offs of 5.1%, it could come down to 152.50. And the second next one was 7.8%, which is 148.20 thereabouts. So decent downside potential if they do act. With potential resistance level here, you've got this congestion zone from the prior top, and you've got the low of that candle sitting around 159.50. You've also got 160 as well. Obviously, those highs. The closer it gets to that level, the greater the chance it is of traders wanting to book a profit anyway. And if they do intervene, we should get that quicker move. Looking through some of the other pairs, Aussie yen has caught my eye because this is a pair that's really, really outperformed. But notice how the character has changed from this movement. Certainly, we had almost the last hurrah on that 3rd of April, had the intervention kick in. It's now taken out marginally that high, but it failed. You've got double top around 114.70 and prices moving low. But what caught my eye today specifically, it was a bearish engulfing candle on the daily chart. So there's no imminent signs of a low, and this could continue low on the daily chart. If we look at the 1 hour, it's got a decent bearish trend there. So prices for now at least have hovered around this resistance zone. If it does break higher earlier in the Asian session, then we've got the high volume node around here and the swing highs. So I'm just looking for evidence of a swing high around current levels or one of these resistance zones, and then momentum to realign with that bearish move. And in terms of downside targets, we've got sort of 112, which is the handle, I think it's the weekly S2 pivot point as well. Opportunity to get a break beneath this low here. Pound yen is interesting because it's bucking the trend now. You need to be careful because if Bank of Japan, also MRF, do intervene, that's going to be mass strength for yen in general, and all currencies will probably depreciate against it. If for some reason they don't do it and dollar yen is continuing to allowed to continue higher, then actually pound yen looks more interesting to me because you've got this really decent bullish engulfing candle. You've got this inside day at the top, and on the 1 hour chart, you've got this is almost like a bullish flag pattern forming above the monthly pivot points. So we've had the pullback. If dollar yen continue higher, pound yen stands a decent chance of continuing. So that's one of my preferred longs if the MFF don't intervene. Swissy yen, I'm just going to focus on the daily chart. Let's zoom out to the monthly, because if you want to really look at this trend, the fact is it actually started way back in year 2000, 26 years ago. So I'm not going to pick a significant top on this just yet, but you can see that throughout this trend, we've got on the monthly chart, you've got this, what looks to be a bearish, it's a bearish candle, nearly a bearish outside week, a month, not quite. You've got the shooting star candle. We're now trading in the upper wick. So there is a slow story emerging for a decent pullback on Swissy yen. On the weekly chart, it's effectively been ranging mostly between 200 and 204. 204 has been a significant level of resistance. You can see on the weekly chart, double top there, had this bearish pin bar, and now prices are kind of struggling to get back up there. And when I look at the daily chart, I just like that we've got this sell-off. Here's the intervention day. That to me is a classic sign of a retracement, because you've got overlapping candles. It's making really hard work of those gains. And I like that we've got this clear 2-bar bearish reversal beneath this swing low around Monday's high. So I think quite simply, retracements within yesterday's range could be appealing for bears for movement down to maybe 200, but you've got this high volume node as well. So there's a few ideas there on the end. Hope it's useful. Wish you best of luck with your trading.